Well, g'day there again, traders. Thanks a lot for joining me in this Monday afternoon market recap as at the close on April 11th, 2016. I want to again update you and, of course, stress the importance of the potential of a major market reversal taking place up at around the current levels which we are trading at. Again, taking it one step further from the video I released over the weekend. First of all, if you haven't seen that video, please stop this video and click on the 45-minute session which I posted on YouTube, I believe, Saturday morning US time. Have a look at that. It is 45 minutes of analysis on the three US indices, also in addition to the Russell 2000 and the Dow Jones Transportational Average, to really get and understand the macro picture by which this market is trading by and the transitional movements which we are currently seeing. But in this video, I'm going to once again zoom back on into the molecular level. What has happened, what has transformed during Monday's trading session. Now, what I've done, this is simply the daily candlestick chart of the Dow Jones Industrial Average as at the close on Monday. And this is the candle which we are left with. It is once again, this is again forming and continuing off from the sentiment which has again changed last week. And of course, that daily candle we saw set up on Friday last week, we have essentially established a textbook shooting star candlestick reversal signal. Again, it is a reversal signal, a bearish reversal candlestick signal, and it's happening once again at resistance up at that declining primary bearish trend line. If I zoom out and show you this picture, have a look at that trend line which is formed on the Dow Jones Industrial Average. Again, let me zoom in and just walk you through the sentiment. We started the session on Monday very, very strong, or somewhat strong, I should say. We actually pushed on up above not only Friday's candlestick, but also Thursdays, Wednesdays, and Tuesdays. It was looking very healthy towards the beginning of the session, but once that first hour and a half had concluded, we saw the sellers jump back into this market. Not only that, but we closed right down where the lows were on the daily candle. You can see the real body color right here. It is a dark candle indicating that the close was below the open of trading on Monday. On top of that, have a look at the volume spike beginning to set up on Monday. This also coincides. Let me just show you this. I'll bring up my vertical line drawing tool just here. You can see again the shooting star candlestick at resistance, the early reversal warning, coinciding with that volume spike. If I bring up the vertical line again, you can see this 3-day reversal candlestick pattern right here, an evening star reversal coinciding again the selling pressure which we saw on Tuesday last week, again with an increased spike in sellers in terms of volume. Pay attention to these signals. They're not only setting up on the Dow Jones Industrial Average. Have a look at the S&P 500 also. What is this candlestick which is set up on Monday? Again, this is not so much a textbook. The Dow Jones Industrial Average, the candlestick formation on Monday, was a textbook shooting star candlestick pattern. The body itself was 2 to 3 times less than, or I should say the upper wick was 2 to 3 times more than the real body of that candle. But as you can see, we're very close. It's more so here, just under half, but it still takes the formation of the shooting star candlestick. Again, volume is spiking. We've seen the spikes in volume also coincide with a lot of these bearish down days. You can see this particular candlestick right here, a one black crow. And again, going back to Tuesday last week, on this particular candlestick right here, sellers, sellers, sellers. All right, on this big one-day candlestick here, this long day Morobozu bullish candlestick, volume wasn't as high as what we've seen over the past 2 trading sessions last week, and very close, very similar to the volume which we saw on the S&P 500 today during Monday's trading session. The Nasdaq, again, let me just go up and familiarize yourself with this particular candlestick. This isn't what we call a shooting star. It is more so another one black crow setting up. We haven't seen the break of support, but it looks as though we're going to see this current week. And what does that mean for the market? Well, not only are these markets, again, showing us a lot of early reversal candlestick signals. Let me just bring it up on the Dow Jones Transportational Average again. You can see that shooting star candlestick set up as at the close on Monday. Have a look at the volume spike again on the Dow Jones Transportational Average. And finally, let me just bring up the Russell 2000. You can see right here, what is that candlestick again? A mirror image of the candle we saw on Friday. Yes, the real body is a different color. It is a dark candlestick on Monday compared to that on Friday, this one right here being white. But again, the sentiment, the story of the formation of these candlesticks are indicating that the sellers are gaining momentum, gaining the upper hand, the advantage right up at the varying levels of the primary bearish trend lines, and of course those overhead resistance levels which I've referenced in the videos. we have got a ton of trades set up, ready to go on the top 12 list in that pro analysis class. So if you're here looking at this market analysis and you want to understand, well, how does this apply and how does this relate to individual stocks, I'd encourage you to have a look at that analysis class, because over the coming week, maybe 2 weeks or so, I expect the majority of these individual trade setups to trigger based on the analysis and to start moving profitably in our direction. All right, so I just wanted to bring that to you. As at the close on Monday, again, signals. Pay attention to the major signals taking place, because they are alerting us that momentum, and of course, the true direction, of course, being those macro lower highs and lower lows, are again going to continue potentially, before the end of April, definitely into May 2016. And it just depends, well, do we sell off and move straight back down to these lower lows, which we've seen in January and February 2016? Or are we going to set up a higher low and see one more final push back on up into this overhead declining primary bearish trend line, and then see the absolute base fall out of this market? They're the two scenarios which I'm looking at. But right now, again, a lot of individual trades, as per our top 12 individual trade lists, have got not only similar candlesticks, but also haven't actually rebound as much as the general indices have. That indicates, again, weakness in terms of breadth, all right, showing up in the top 12 list, especially these stocks over here, which are, again, largely followed by the majority of people who trade and transact and also invest in the US financial markets. You can see Apple, Amazon, Boeing Airlines, Baidu, Caterpillar, Chevron, Google, Goldman Sachs, IBM, Netflix, Tesla, and Walgreens Boots and Alliance. These are not random countries. They, again, are the major players on the financial markets, or at least a large portion of the most widely followed stocks. And again, I'm telling you right now, without going into the individual analysis of these stocks, that a lot of them, if not all, have got all of the reversal signals which we need to see before, of course, that selling wave moves in and coincides with both the indices and, of course, these individual stocks as well. So again, a little disclaimer, be careful out there. If you are buying the market, if you're looking to buy this market long, please do not be a hero and do that up at these levels. Maybe potentially you have a short-term trade once the market oscillates back down to support. But again, having said that, I think the next time we do come down to macro support, which is going to be sooner rather than later, I'm expecting the actual macro support to break, and then we're going to see again the continuation of the long-term bearish trend, which hasn't really shown up or hasn't really distinguished itself as much on the Dow, the S&P, and the NASDAQ as what it has already on the Russell 2000 and also on the Dow Jones Transportational Average as well. So just write DJTA as well. These two are very well defined in a bearish move. Of course, these three markets over here, the largely followed US indices, are also in confirmed bearish trends, but we are still up around relative highs, okay? And this is where the tipping point is going to show up, and this is where, again, the opportunity is to hedge, or of course to be looking at individual shorts through analysis and be taking on considered short positions. Outside of that, friends and traders around the world, be careful. Follow the analysis, let the technicals guide you, of course the fundamentals as well. But it's really hard to find anything positive right now in the financial markets to indicate that we should be buying this market up at these levels. Again, a lot of warning signals. Again, the formation on Monday across all 5 of the markets I've just recapped, notwithstanding, of course, the individual trade analysis on these top 12 individual trades. Have a look at Pro, learn about technical analysis, and set yourself up to capitalize on some of these major market movements which are set to happen. All the best, everyone, right around the world. It is James signing off on behalf of Pivot Point Trading. Goodbye.